Hey, good morning. This is May Valensky with Driving Markets. So firstly, I hope you're enjoying the broadcasts because there's a lot of new viewers have come on board. Thank God, I'm very happy about that. And if you do like it, they can always press the like and you can subscribe and you can send it out and resend it. So a bit of good feedback, whether positive or negative, I'm happy to receive, just to know if I'm in the right direction on driving markets. Okay, so the markets have been, as expected, extremely volatile. I give a report every day. Yesterday the markets were up in the morning, then they came off, and then they closed more or less a little bit down, with the Nasdaq slightly up by 19 points. Now there's a few factors that's happening economically that we need to have, are having more of an impact on markets than ever before. Yesterday was the producer price index, the PPI in the States, and last month it was a 0.4 rise, monthly rise, and yesterday it jumped up to 0.8. So the annual rise on the PPI, the inflation at producer level, is 10.8%, which is much higher than the market expected. Now you've got the 10-year Treasury, as a result, jumped to 3.47%, which is the highest level in 11 years. Everyone's expecting a serious jump in interest rates. Now what happened yesterday morning is, when the PPI came out, I did say that there was an outside chance that the Fed would increase interest rates. The Fed is the FOMC, the Federal Open Market Committee. I did say there's an outside chance that they would raise interest rates by 75 basis points because of the soaring inflation and trying to rein in some sort of control on inflation. However, during the day, as the PPI came out and other indicators came out, it looks like that 75 basis points, that's 0.75%, looks more likely to happen. In fact, one of the US groups, the CME banking group, came out and said there is a reasonable chance that rates may rise by 75 basis points, and this would be the first time that's happened since 1994. However, the more I think about it, the more I'm looking at the markets, there is a reasonable chance. I wouldn't say it's odds-on favourite, but there's a chance that interest rates can rise by 75 basis points. And what impact would that have? First of all, the market's not expecting it. The market's built in a 50 basis point rise. So that if it was 75 basis points, that would send the dollar soaring sky high and send other major currencies south against the dollar. What else would it have? It would send up yields dramatically, so that would be a significant jump. And it would also cause the markets to fall further. So at the moment, the Dow, for example, is hovering around the 30,000 level, 30,400. If it breaks below 30,000 level, then it's going to go down significantly. Now I'm calling the Dow down by the end of the year to around about the 22,000 level. I'm a big bear on the Dow. I think the Nasdaq is going to be hammered even more, simply because as rates rise, then it becomes a lot less attractive to invest risk money in these assets, as with the cryptocurrencies. So when we're looking at the interest rate rise, you've got to take into account the impact on financial markets, especially the high growth sector. So lots of viewers contacted me and said, what's going to happen? Is this now a time to buy Tesla or Amazon or Facebook or Netflix or any of the high growth stocks? And my answer is no, it's not the time, because if you're buying it on a day trade or 2-day swing, then yes, you may make money because there'll be bounces backwards and forwards. But if you're buying it on a long-term hold, then now's not the time to invest in high tech stocks or high risk stocks, simply because the trend is downwards due to the interest rate environment. And as long as you have higher interest rates on the horizon, and as long as you have the risk of inflation, then all of those shares that are high risk are going to end up going down. So someone also said, oh, maybe they should buy Bitcoin at 22,000. Well, it is okay to buy Bitcoin. I'm not saying Bitcoin is going to go to zero, even though there is a risk there, but it's it depends if it's a day trade or a week trade, how long you want to hold it. If you want to hold it long term could be 3, 4, 5 years, then go for it. If you're looking to make money over a week and you're going to margin it, which means you're only going to put down part of the money, not buy all of it, then that is high risk. If you're going to put down all your money, you're going to put in your $1,000, $2,000, $3,000 or $10,000 worth of Bitcoin and just sit on it, then it's an investment and let's see where it goes. And my opinion is that short term, Bitcoin is going to continue going down well below the 20,000 level, and then eventually it will become attractive to those investors and they'll start picking it up again at a lower level. But as long as there's a fear factor within the financial markets, then high risk stocks like cryptos and like especially the small cryptos and like the Nasdaq or shares in Nasdaq, the trend is down and the pressure on them is downwards. I would recommend not to invest in any startups as an angel investor at all, because they're likely to go south and likely to crash. The startups, they're just complete and utter waste of time at the moment. So that's it on the shares. So I expect Tesla to fall to around about the 450, 350, 450 level. I'm expecting Amazon to fall to about the 65 level. Facebook, I'm a big bear. I think it's going to fall to 100 level. Let's look at the Forex markets. So because we've got such dollar strength, then the dollar is on the rise. It's on the trend is up. So you should not be going short of the dollar. You should be buying the dollar at any level because it's going to get stronger against all currencies. So you should be staying long of the dollar. Now, one of the viewers said to me yesterday, but hold on, it's jumping around. He goes, yes, I'm not saying it's going one straight line north. It's not going to go in one straight line upwards. But the trend on the dollar, as long as the inflation is out there and as long as there's fears of recession, the dollar is on the way up. But there will be days, obviously, when there be dollar weakness, when the bulls come back in and they start buying the market or trading the market and pushing the indices up, then the investors will sell the dollar for that 1 day, 2 days, 3 days, and you see other currencies go down. So it's not just one straight line up or one straight line down. There's volatility, which is a great opportunity for those people who want to trade. The other thing I want to look at, which has been asked by many viewers, is what's going to happen to the property market. Where are mortgage rates? Well, mortgage rates in the States reached yesterday 6.29%. And one of my colleagues sent me a text. Thanks for this one, Phil. Look at Redfin. Redfin is an estate agency, real estate agency in the US. And they are in line with another agency called Compass. They're massive, they're huge, and they're laying off 10% of their staff. Well, actually, I think it's 8% of Redfin and 10% of Compass, because the sales have dropped to such a low level that they don't see the market activity there, and therefore mortgage applications have dropped to a 20-year low. So it's causing a lot of problem in the property market. Now, I've called the property prices down over the next 12 months around about 25%, and I've had some serious reaction from viewers that I'm talking trash. It's not going to happen. There's too much demand. Prices aren't going to drop. That might be the case, but this is my opinion. Everything said in this broadcast is my opinion, and my opinion is based on the fact that I think we're going to see a 25% drop in property prices. That's more or less it. So I'd like your feedback. I'd like to see what else I can improve upon. One reviewer wants to know about precious metals. Precious metals, the nickels, the palladiums, are only going to go up as the dollar rises. Then the commodity price is going to go up, because they're all based on the US dollar. So yeah, I would go long of palladium and nickel for those viewers who are precious metal traders. But overall, give me your views, like the video, subscribe, and send it out. Speak to you soon. Have a good day. May Valensky, driving markets.